Okay, welcome back. Today we're looking at 2022 October-November question paper 11. Oh, too far. Okay, so we start from question 30 again. A manufacturing firm in a low-income country has decided to close. What is most likely to have caused this decision? Okay, so start from the bottom. An increase in subsidies received from the government. Well, that's not a reason why a business would close, irregardless of whether it's low income or high income country, because the government would be essentially giving them free money. An increase in productivity is also an unlikely reason for them to close, because they would be able to produce more products at possibly even a lower cost. So that would help a business, not be a reason why a business would close. If there's an increase in global demand for its products, same as previously, that would also not be a reason why a business would close, because that would mean that there's a greater demand for their products, so therefore they'd have the potential to make more profit if they could increase their supply. However, if there's an increase in foreign multinational companies operating in the country, what does that do? That essentially creates more competition for the manufacturing firm. And foreign multinational companies moving into a low-income country, they're likely to have a greater number of resources available. And they're likely also, due to the fact they're a multinational company, already have an established consumer base. So it means that in the majority of cases, the increased competition will take away some of the customers from a manufacturing firm, and therefore that's a reason why they might close. Okay, question 29. Which row shows the potential benefits of free trade to consumers, producers, and the economy? So we're looking for benefits here. So A is higher income. Okay, now how is free trade going to result in higher income? It's not for consumers. It's going to create more choice for consumers, right? Because that means free trade means that they can import goods freely from another country. So they don't just have to buy goods from their own country or from their own firms. They'll be able to get them from other countries. So therefore that will create more choice. It means the quality of the products will likely be higher because they'll face increased competition. And through increased competition, the quality of the products that consumers will purchase will generally be higher as they can now import freely. Okay, lower prices would be a benefit for consumers, and so would more choices. So we're left with C and D. If we move to producers, increased competition is not a benefit to producers, is it? Increased competition would happen, but increased competition is a reason why the consumers here have more choices. It's not a benefit to the producer. The producer doesn't want more competition, but what they do want is a larger market where they can sell their goods and their services. Therefore, D would be the correct option here, as producers having a larger market and consumers having more choices means that there's likely to be lower unemployment in the economy. Okay, Vietnamese competitions buy insurance from companies in the US. How will this transaction be recorded in the Vietnamese balance of payments? Okay, so first thing to remember is, what's the balance of payments made up of? It's made up of the balance of trade in goods, the balance of trade in services, primary income, and secondary income. So in this case, if we're buying insurance from companies in the US, what are we purchasing? We're essentially purchasing a service, right? So it's not a good, it's not a current transfer, but it is a service, and now we need to identify whether it's a credit or a debit. So one thing we need to remember is that when it comes to the balance of payments, credit, for a simple way to remember it, is the money that's coming in, and a debit is the money that's going out. So therefore, it would be trade and services because we're buying a service from the US, and it would be recorded as a debit on the Vietnamese balance of payments because the money is leaving Vietnam and we're paying a US company for these services. So just quickly, if the transaction was in the US balance of payments, it would be trade and services credit. So that's what it would be in the US, but because we're told in the question it's the Vietnamese, the money is going out of Vietnam because we are paying for it, so it will be recorded as a debit. Okay, another question 27 is another balance of payments question. So we're told table shows details from a country's balance of payments that has no secondary income. Okay, that's unusual. What is the country's balance on its current account? So like I said before, we've got balance of trade in goods, balance of trade in services, primary income and secondary income. In this case, we're told that there's no secondary income, so we don't have to account for that. But we do have to calculate our balance of trade in goods and our balance of trade in services. Now, to calculate them is very easy, because what we basically do is exports is the money we're getting in, so they're obviously going to be a plus, and then we take away our imports because that's the money that's going out. So exports of goods minus imports of goods leaves us with minus 70 as the balance of trade in goods. Exports of services minus the imports of services leaves us with a plus figure of 50, and our net primary income is minus 40. So if we add them up, minus 70 and minus 40, that's going to be minus 110 million, plus 50 leaves us with minus 60, and we know that deficit is minus and surplus is a plus. So A will be the correct answer there. Okay, the table shows the percentage contribution of agriculture to the GDP of 3 countries in a year. What can we conclude from the table? Okay, so we'll start at the bottom. Total agricultural production was higher in country X than it was in country Z. Now, can we conclude that from the table? No. We're not told what the total agricultural production is. We're only told what the percentage of their GDP is. But we don't know what the GDP for country X is, or for country Y or country Z, so we don't know how much that 18.5% is actually worth, or that 2.2% is actually worth. Okay, country Y was likely to import more agricultural produce than country Z. Again, we don't know, or we can't conclude that from the table. And in this case, the percentage of agriculture to GDP is lower in country Z, so it's actually more likely that country Z would import more agricultural products than country Y. But again, we don't have the information because we don't have the GDP figures. Agricultural production in country Z was not as productive as it was in country Y. So again, we don't know if that's true. That 2.2% may actually be more productive than 3.9%. They may be using less resources in country Z to make that much agriculture, and they may actually be using more resources in country Y. But we don't have that info, we only have the percentage that agriculture contributes to GDP. Therefore, the only thing we can conclude from the table is that country X is likely to be less developed as a country than country Y. And why is that? One thing we learn is that the higher the percentage of GDP in the primary sector, that normally equals a developing country or a poor country. And the higher the percentage of GDP in the secondary or the tertiary sector, then the more likely that the economy is developed or a rich country, to put it in simple terms. Okay, the table shows the HDI, Human Development Index, for a country in 2 years. So very simply, we've gone through a few of these questions before. What does HDI measure? HDI measures living standards. And what is not included in those measures? Well, what's not included is an increase in gender equality. So it doesn't actually, or it isn't able to measure the distribution of income between women and men, but it does measure the income per head, so the income that the average person will earn or generates. It does measure the increase in life expectancy, and it does measure the years of schooling. Again, just to recap, you can check your notes on Unit 5 and your slides. They break down the components of HDI. Okay, question 24. The table shows the percentage change in earnings and consumer prices for 4 countries in a year. Which country is likely to have experienced the greatest increase in real income during the year? Okay, so remember that real income is the salary increase that they get minus the rate of inflation. Okay, and in these cases we can see that consumer prices have gone up and have gone down. So when the consumer prices go up, that means that inflation is in the economy if it's a plus figure. Therefore, prices of things are getting more expensive. But if it is actually a minus figure, that means that we've had deflation, which will actually increase the purchasing power of individuals. So how do we calculate it? In this case, in France, their earnings have gone up by 6.5%, but the consumer prices have risen by 3.5%. So because it's a plus, we know it's inflation, and therefore because products get more expensive, we have to take away the salary increase from what they've earned. So the net effect on real income in France would be 3.0%. That's a 3.0% increase. So the same for Germany, and we're left with a net effect of 0. So essentially their incomes have not risen, despite the fact they get a 4% earnings increase, because inflation is also 4%. In Japan, because we have deflation here, their earnings have gone up by 4%, but they've actually got an extra 1% in real income because they have deflation. So the price of goods and services have actually reduced from what they were in previous years. So Japan will be a 5% net increase, but the UK will be the correct answer, because 6.5 plus 2 will give an 8.5% increase in real income for the workers in the UK. Okay, what type of goods have to be financed by a government? So the key is in here, what has to be financed? And what has to be financed by the governments is public goods. Okay, free goods don't have to be financed because they're not scarce, they have no opportunity cost, and there's no factors of production involved. They're things like sunlight or air. So government doesn't have to do anything with them, they exist already. The government also doesn't have to finance demerit goods because they're bad things for society, right? So therefore they're not going to finance them, they're actually going to try and reduce the consumption of demerits. And finally, they don't have to finance capital goods. Capital goods will be financed by the private sector. So they'll be financed by the individual firms that are making their profit, and they reinvest their money back into capital goods so they can increase the number of goods they make in the future. But public goods will have to be provided or financed because public goods, they're non-excludable and non-rivalrous. And what does that mean? That means that private firms can't make a profit from them. So private firms won't actually make those goods or services because they can't make any money from them. Therefore, the government have to provide them. Okay, 22. A decrease in which variable is most likely to cause the rate of inflation to increase? Okay, so first thing we need to do, the rate of inflation to increase, we must be thinking that AD has to move to the right. Now if you look at my previous videos, I explained what can we do to use this. We can use either expansionary fiscal or expansionary monetary policy. And just to briefly put them in here, so if I say expansionary fiscal policy, what does that equal? That equals taxes down and government spending up. So we'll increase government spending and we'll decrease taxes, or we could use expansionary monetary policy, which is where we reduce the interest rates we reduce the level of regulations that are in an industry, that we call them credit regulations. We increase the money supply, because if more money is flowing around an economy, more will be spent. Or we depreciate the currency. Depreciation, remember, is the level of the currency goes down, and that will increase our exports. So once we know this information, we can clearly identify that the correct answer for a decrease in which variable will be the interest rate. Because if we decrease the interest rate, that means that we will shift AD to the right, and shifting AD to the right could cause inflation. Okay, if we decrease the money supply, that's contractionary monetary policy. So that means that AD would move to the left. And that would decrease the rate of inflation, not increase it. The budget deficit, so again, decreasing a budget deficit means that what we're doing is we're decreasing government spending. And we can see here, that would then also be contractionary fiscal policy. So AD again would go left, not right. And the wage rate wouldn't apply. It's not an expansionary fiscal or expansionary monetary policy. Okay, a shop worker was made redundant due to the introduction of self-service checkouts. What type of unemployment is this? So we need to remember what the types of unemployments are about. And basically we have frictional, which is where workers are in between jobs. For an example, an actor will work for 6 months, and then they may not be working for another year while they're waiting for their next job. Structural is technology advances, get rid of industries, etc. Or consumer demands, tastes and preferences change. So an example of that would be the coal mining industry, where people don't want to use coal anymore because of its effect on the environment, so we're trying to switch away from coal to more natural resources. And then finally, cyclical unemployment, which is a lack of AD. That's what it results from. We sometimes call it recessionary unemployment because it's very closely linked to a recession. So we can see in this case the type of unemployment that it's likely to be will be structural, if we know what our structural unemployment is. Seasonal unemployment is a type of frictional unemployment. It's where workers work in, for example, areas where they get a lot of tourists. So during the summer they might have a job, but during the winter they don't have a job, so they're in between jobs for those periods. And cyclical unemployment is from a lack of AD, but we're told that there's the introduction of self-service checkouts, so that would be a technology advancement, getting rid of those jobs for the supermarket workers working in the shop. Okay, the table shows real GDP and population for 4 countries. Which country has the highest real GDP per head? So this is very simple. What do we need to do? We just need to divide our real GDP into our population per millions. So if we do a quick calculation here, 200 divided into 80 will give us 2.5. 100 divided into 25 will give us 4. 80 divided into 50 will give us 1.6. And 60 divided into 12 will give us 5. So we can see here that our real GDP per head, which is the GDP that one person generates, will be highest in D. Okay, what is the most effective way for a government to raise national output? So remember that a national output is either AS going right or AD going right, and I've explained the reasons why AD would go right down below. So if we encourage a period of deflation, that's possibly we can raise national output, but it also means that national output could go down because it depends on the type of deflation that it is. If it is good deflation, output will rise, but if it is bad deflation, output will go down. So it's unlikely to be the most effective way because it depends on the type of deflation. If we restrict the trade with other countries, well, what's going to happen? Our AD is going to go down in those cases, isn't it? And it's not going to raise output because we're not going to be importing or exporting with other countries, so we're not going to be selling or making as much products and services. And if we limit the size of our population, well, then we're not going to have an increase in demand for products. And if we don't have an increase in demand for products, then firms don't need to make more goods and services. So that's also unlikely to be an effective way to raise output. But if we improve the productivity of resources, what's going to happen? We're going to be able to make more products and services with the same level of resources. So in this case, that would be represented by a shift in the PPC curve, right? So an increase in the quality and or quantity of resources. We're able to make more with less. Okay, what is the most likely effect of increasing the rate of interest? So remember that when we increase the rate of interest, that is a contractionary monetary policy, and that means that we move, or AD will move to the left. Okay, now what happens when AD moves to the left? Well, we know that national input goes down, income goes down, and employment goes down. But when we're talking specifically about the rate of interest, if the rate of interest goes up, that means that less people will borrow money from banks. Why? Because they have to pay back more money. But more people will save their money in the banks because they're going to be getting more money back for keeping their money in the bank. So let's go through this. The rate of inflation falls. Yes, that's possible. The exchange rate falls. Okay, not from increasing the rate of interest. In fact, it would likely appreciate as more people want to move their money into our country and into our banks because they get better returns. Cost of government borrowing would increase because they have to pay back more money. Hence the reason why we said here less people will borrow. And investment will decrease because AD is going left, it's not going right. So the rate of inflation is the thing that will be the most likely effect. And why? Again, it's due to AD going left, which we know will reduce the rate of inflation. Okay, not going to spend too long on this one. What change is an example of monetary policy? You can just look at the questions down below that I go through monetary policy, and we said that that's a depreciation of the foreign exchange rate. Import quotas, import tax, they're both protectionism measures, they're not monetary policy, and a reduction of unemployment benefits is also not a monetary policy. Okay, question 16. What's included in a government budget calculation? So remember, what's a government budget? Government budget is government revenue and government expenditure. So it's the money that they collect through taxes, etc., plus the money that they spend. So do they include opportunity cost? No, they don't. Opportunity cost is something that happens when they have government expenditure, because the amount of revenue they have is limited, right? So they have to make choices. They also don't include external costs. That's limited to individual firms, etc., or individual industries. They don't include export revenue, because they only include the government revenue that is generated, but they do include indirect tax revenue. Government revenue comes from taxes, direct and indirect. So income tax, corporation tax, and then indirect taxes, sales tax, VAT, GST, ad valorem taxes, etc. Okay, two large-scale firms involved in chemical manufacturing wish to merge. Why might the government decide to prevent the merger? So why do they want to stop them? Okay, results in higher wages paid to labour. Well, that's a good thing for people, right? So why would the government want to stop that? They wouldn't. It increases productivity per worker employed in the industry. Again, that's a good thing, so why would they want to stop that? And it enables greater economies of scale. All of this stuff may be true for the firm, but that's not a reason why the government would stop it. They would stop it if it reduces competition in the industry. In other words, if the business is able to have or become a monopoly because of this merger. Okay, a firm produces bicycles. It uses a combination of workers and machines. The table shows the output from different combinations of workers and machine. Which combination shows the greatest labor productivity? Okay, this question may seem difficult, but it's actually not that difficult at all. We're not told. We can see here that the machines is 5 at each level, right? But the number of workers changes. So we're given our final output for each also. Because we don't know how much each machine is working, we're going to ignore the machines in this instance. And we're just going to calculate how much the workers are generating for the level of output. So 17 divided by 4, that would give us 4.25 units per worker, right? 32 divided by 8 would give us 4 units per worker. 45 divided by 10 workers would give us 4.5. And 76 divided by 20 would give us 3.8. So we can see in this case that at C we would have the greatest labor productivity. We're making the most with the level of workers that we have. So each worker is making more at C than they are in B, A, and D. Okay, question 13. A firm sells 50 units at a price of $3 per product. What is the firm's total revenue and average revenue? Okay, so we know total revenue is the price they sell it for multiplied by the quantity that they sell, right? And average revenue is just what they generate from each unit. So 50 units at a price of $3 per product. Their average revenue is the price that they sell it for, which is $3. And 50 multiplied by 3 gives us our total revenue, the total amount of money they're selling or they're generating from sales, which would be 150. So the only one that would match up to that here is C. Okay, 50 is the number of units, not the total revenue. Okay, question 12. A musician has a choice of playing for an orchestra in either Germany or England. What combination of incomes and cost of living is most likely to cause her to choose the German orchestra? Okay, so first of all, what type of after-tax net income would they receive? They'd want it to be higher, obviously. because they want to get more money if they want to choose Germany rather than England. After tax is the amount of money you get into your pocket. Pre-tax is your income before you pay your taxes in the country. So for the cost of living, they would want the cost of living to be lower also, wouldn't they? Because in this case, the cost of living is lower, then that means that it doesn't cost as much money to live in that country. So the only option that we're left with is D, right? Where they would have lower income before tax, but they would actually still get more money after tax than they would have in England. And they've not just got more money in Germany than they had in England, it also costs less money to live in Germany than it does in England also. Okay, what statement about different income groups is correct? So, high income groups do not need to borrow money. That is not correct. High income groups will still need to borrow money. If they want to start a business, etc., or they need to expand their firm, or they need to buy an expensive house, they're still going to need to borrow. High income groups save less money than low income. That's also incorrect. Because they've got a high income, they're going to save more money than people who have a smaller salary. Low income groups find it easier to borrow than high income. Again, that's incorrect. Obviously, if they've got a low income, it's going to be more difficult to borrow because the bank is going to look at their ability to pay back the money. So low income groups save a smaller percentage of their income than high income. That is true. Because they've got a smaller amount of money, when they pay for their rent or they pay for their bills or whatever necessities they need in a month, they're going to be left with less money that they can save than high income groups. Okay, question 10 is again relating to the functions and characteristics of money. So again, you just need to go and learn these. In this case, what advantage do coins have that makes them more suitable than paper banknotes? The advantage they have is that they're durable, so they don't break as easily. Paper banknotes can break easily. They're both divisible. They're both portable. And they're both recognizable. But the advantage that coins has over paper banknotes is that they're more durable than them, so it's harder to break them. Okay, question 9. Which organizations can directly fund the growth of firms? Okay, so the first thing to note is that the central bank cannot. The central bank, remember, just operates monetary policy and it bails out these guys, the commercial banks, if they get into liquidity issues. So they cannot directly fund the growth of firms. So the next one is commercial banks. And yes, they can, because who do the firms go to get their loans? They go to the commercial banks to go and get loans that they need to expand their business. And the governments can also fund or directly fund the growth of firms. Remember that governments can give grants to different companies, and they can also provide subsidies to different companies which can help them to grow. So governments can directly be involved. Okay, question 8. In a free market, market failure causes a misallocation of resources. What is not an example of market failure? Okay, so underconsumption of merit goods is an example of market failure. We know that already. Overconsumption of demerits is also an example of market failure. And external costs of production, that's something that also is an example of market failure. It's associated here, so A is associated with C. When we have demerit goods, they generate external costs. That is a reason why the market would fail. But internal diseconomies of scale are not a reason for market failure or an example. They are where the average cost of production for a company increases, and that will be due to failings on the company's behalf, not due to how resources are allocated. So if you want to look over market failure, slides and revision notes, Unit 2, there's a chapter on it in there. Okay, what is the significance to firms of price elasticity of demand? So basically they're asking us here, what does price elasticity of demand allow a firm to do? And the answer to that would be, it allows firms to predict the effect of a change in price on their total revenue. So essentially the firms can see whether they're elastic or inelastic, how their revenue would change. So if they have an elastic PED, they can decrease their price to increase their total revenue. And if they have an inelastic PED, they can increase their price to increase their total revenue. It does not allow them to predict changes in cost of productions. That is a limitation of PED. So it's a problem with PED. It does not allow them to measure their ability to change production. That is what PES is for. Which is where, once they see the demand, are they able to release their supply to the market to make the extra profit? PES measures that because it measures supply. And it doesn't measure the effect of a change in the price of their competitors either. That's what something called XED measures, right? Measures substitutes and complements. You don't look at that in IG Economics, so you don't need to worry about it until next year. Okay, the diagram shows the demand for and supply of plastic bags. The original equilibrium is P, so we can see that here. We start from this point. How would the introduction of a unit tax on plastic bags be shown? Okay, so remember, what's a unit tax? A unit tax is an indirect tax, right? And what we should know at this stage is that when we have an indirect tax, supply will shift to the left, the quantity that is traded will go down, and the price of the product will go up because they're increasing the business's costs of production. So if we see here, that means that we would have to shift from S1 to S2. So correct answer will be C. Demand would shift to D3. That would happen if we have a decrease in demand. So for example, if we have a decrease in consumer incomes, demand would shift to D2. That would be a shift to the right in demand. So an example would be an increase in consumer incomes. And supply would shift to the right. That's if if not when they have an indirect tax, but if they have a subsidy. Because when they have a subsidy, we'd be able to increase the level of supply because our costs of production would decrease. Okay, diagram shows the supply of motor vehicles. What would cause a shift in the supply curve from S1 to S2? So we can see here that the supply curve has shifted to the right. So from what I said in the previous question, we can check it out this way. Now, would a decrease in the profits of suppliers mean that they would supply more? Definitely not. If their profits go down, they would supply less, right? So we'd have a shift to the left. A fall in the real incomes of consumers. Remember that the incomes of consumers is something that affects demand, not supply. If we have a rise in the cost of motor vehicle components, so therefore what they're saying is, because this is showing the supply for motor vehicles, if we have cost of production that goes up, supply would move to the left because it becomes more expensive for us to make the products, so we're going to supply less to the market. However, if we have a more efficient assembly line using robots, that means that we're getting more productive, so therefore we are able to produce or release more onto the market. Okay, the table shows examples of changes in an economy. Which combination has two microeconomic changes? So remember, microeconomics is the study and behavior of firms, individuals, households, and individual markets, right? So we're not looking at something that affects the whole economy. The rate of inflation, unemployment, they're all factors that will affect the macro, or there'll be macroeconomic changes. Okay, so in this case the answer that we're left with is C. Reduction in output in the car industry, that's a very specific industry, hence why it would be micro. And in the second part we're told about a rise in the average earnings of healthcare professionals. Again, that's an individual industry, so it would be a microeconomic change. Okay, diagram shows a production possibility curve for country Z. Government policy is to move from point X to point Y. Okay, now on previous years, 2023 and 2024, I said that we condense this and create it in this way. We know that when we move to more capital goods, what we will have is less living standards, but we can increase productive potential in the future. That's if we allocate to having more capital goods. Whereas, if we have more consumer goods, we will have an increase in living standards. That's in the immediate future, but a reduction in the long-term productive potential. So capital goods are what help us to grow our economy. Consumer goods are what help us to enjoy a better standard of living. So in this case, obviously, the most likely effect is that living standards will rise in the short run. More capital goods are produced is wrong. We're now making more consumer goods, and if we go straight across, we can see that we've moved down the vertical axis here, so we're actually making less capital goods. PPC does not show us the prices, so we can't determine that. And total output increases is not true. We've moved along the curve, so our total output is going to be the same. We're also not given figures on that. We're just reallocating resources from capital to consumer. That doesn't mean that we're making more. It just means that we've made a decision to make more consumer and less capital. Okay, an airline needs people and equipment. These can be divided into factors of production. What is allocated to its correct factor of production? So the first one we're given here is either people or aircraft. So let's mark off the ones that it can't be. People or equipment. So pilots are people, computer network are people, airline owners are people as well, I suppose, and aircraft is equipment, right? But what's the correct factor of production? Are the airline owners labor? No. They'd be the enterprise. A computer network, is that land? No. Land, remember, the natural resources. And pilots, are they enterprise? No, the pilots are labor. So aircraft would be capital, and that would be the this one matched up with the correct factor of production. Okay, the Chinese government is concerned about the level of poverty and the need for more resources in low-income regions of the country. As a result, it is increasing its expenditure in those regions and reducing it in high-income regions. So straight away, when we get this in the question, we should know what this is. This is going to be opportunity cost. Why? Because opportunity cost, if you remember, is concerned with making a decision, right, where you have to give up something else. So what they're doing essentially is they're increasing their expenditure in these areas, but they're reducing it, or they're giving up the spending that they have in the high income areas. Remember that diseconomies of scale is an increase in the average cost of production for an individual firm. That is not an economic concept associated with the basic economic problem. Market forces is just how the market works to determine demand and supply, and specialization is where they focus, this would be a firm or a country, on making a particular product or service that they're very good at making. None of those are represented by the information we're given in here. Okay, thanks for listening. I hope this helped.